good evening, security holders of Frasers, Hospitality Trust and members of SIAS. Warm welcome to this dialogue session. As you know, we have done this whenever we have corporate actions. We convene a dialogue session so that you'll understand the facts and the reasons for the action and for you to ask questions. You must have information and you must have answers for your questions before you decide. So FHT announced on 13 June 2022 its proposed privatization by a wholly owned subsidiary of Frasers Property Limited by way of a trust scheme of arrangement at a consideration of 70 cents per staple security. So some of you have contacted us asking if there can be a review of the consideration slightly upwards. We will discuss that tonight. So I've invited Ms. Yu Chin Fen, whom you all know as Chief CEO of Frasers Hospitality Trust. She will address all your questions ahead of this EGM. You got your circular and you have read it, but you have questions. And the scheme meeting, which will be held on 12th September 2022. So Chin Fen, it's good to see you again. This is the third time we are meeting on this, corporate action. We had a dialogue session first, then we had a fire chat. It was videoed and played for you to look at, listen to, watch and listen to. But it's good to see you again at this hybrid event tonight. There are some unit holders at home, at office watching and sending in questions. And since our last fireside chat in June this year, after the announcement of the proposed privatization, we want to know how things have developed so far. So we will now go on to your presentation.
Yeah, sure.
And I hope your security holders can find the answers through this dialogue session.
Yeah.
So over to you, Chin Fen.
Yeah, thank you. Thank you very much, David. And a very warm welcome to every one of you, our stable security holders of FHT. Very thankful that you can take the time to attend today's sessions this evening. Yeah. And what I'm going to do is I'm going to just very quickly take you through the presentations to explain the transactions, and thereafter we can have a dialogue sessions where you can just, please feel free to give us your questions, and we are here to provide you with more details and to give you clarifications as you need. Right. Okay. Firstly, the transactions overview. This is a privatization's offer. Offeror is Frasers Property Hospitality Trust Holding, which is a wholly owned subsidiary of FPL. The transaction structure here is proposed privatizations via a scheme of arrangement, right? And the scheme considerations is, a 70 cent in cash proposed offer price. With regard to permitted distribution, subject to the terms and conditions of the scheme implementations agreement, the managers may pay accrued distributions for the period from 1st of October all the way to the day immediately before effective date of the privatizations. Now, the approvals that we need will, of course, essentially necessarily be the approval of the staple security holders, first of all, to amend the FHT trust deed and the scheme resolutions itself. There will be also other approvals needed, the court approvals and regulatory approvals, including SGX approval and also approval from the Australian Foreign Investment Review Board. Yeah. Okay, so just, I will proceed to give you a background of the transactions, followed by the rationale of the transaction. Now, as you know, we have announced on the 8th of April proactively that the FHT independent directors had appointed DBS Bank to help us to look at possible options, strategic options, with the intentions to unlock value for our stable security holders. And the various strategic options that we considered included continued pursuits of our existing strategy, expansions of our expansions of our platform via mergers or acquisitions, selling of our assets, or selling of the FHT platform to a third party or even FPL. The factors that we considered when we evaluated the options included the following. Number one, the present state and possibly trajectory for recovery in the hospitality industry, the current macroeconomic outlook, our competitive position vis-a-vis the other REITs in the REITs market, historical trading and performance and operating performance of FHT in the past, the presence of reversionary interests and master lease arrangement with FPL, and of course transaction certainty and the ancillary costs. Right, so with that in the background, we then went on to engage, with parties for discussions. So with the help of DBS, obviously, we reached out to various parties, which included FPL. So when we went on to start to speak to parties, FPL responded to say that they're interested to pursue a privatization of FHT. And thereafter, the FHT independent directors then went on to commence negotiations with FPL, with the view to provide our stable securities with a best possible proposal, that give us the best value and also the most certain transactions. And this has therefore culminated in today's proposed scheme of arrangement, And the reasons why the independent directors of FHT is presenting this to our unit holders to consider is because we believe this presents a very credible offer from a financial perspective. And it also gives transaction certainty in terms of timing and in terms of executions to stable security holders. And it allows our security holders the opportunity to realize their investment immediately at a premium to NAV, and also then realizing the cash to have the full flexibility to reinvest your proceeds. So the rationale for our proposal today, as investors would know, since our IPO, we had proactively pursued organic and inorganic strategies to try to grow the trust. We had, made year-accretive third-party acquisitions since IPO that totaled about 565 million, and also did renovations and AEI to unlock value, which totaled about 60 million. And this has grown our portfolio by about 35% over the years. But despite that, we have not been able to deliver DPS and NAV growth. And this is because of very muted growth in the hospitality sector over the past years, and also the strengthening of Sing dollar vis-a-vis our operating currencies. This chart shows the average RevPAR of the cities that we operate in. And as you can see, across the cities that we operate in, growth even before the pandemic in 2020, since 2015 onwards, the growth across the cities that we operate in, growth has been very muted. And although we were able to drive organic growth that in most cases were higher than average RevPAR growth in most cities, the fact that Sing dollar has strengthened over the years has not helped our case. The strengthening of Sing dollar has offset, whatever organic growth that we could deliver, we could achieve, and also it has also offset revaluation gains that we could achieve in local currency term. This chart shows the the catch up that we need to achieve, to reach pre-pandemic level. Based on these numbers here that you see, negative 71.2 for Australia and so on and so forth, is based on the RevPAR for first half of 2022, financial 2022, which ended, is for the period of October to March, October last year to March this year, the 6 months period, is the average RevPAR of each cities that we achieved vis-a-vis the, fourth Q of 2019. So there's still a gap. So while we are very encouraged that we are seeing countries moving on to endemic phase, of COVID, and also borders reopen, people are traveling, and so on and so forth, but it's still going to take a while for markets to recover back to pre-COVID, level. There are still uncertainties in the market. I'm sure, all of us has followed news, has read about economic outlooks and so on and so forth. It will take time. And some of the reasons why we believe that there are uncertainties is going to take time is summarized in a couple of slides here. First thing first, we have seen geopolitical tensions and looming recessionary pressures, in economies across key cities, key countries, and that has added uncertainty to the recovery outlook. The chart on the left-hand side shows the CPI and inflation index. Yeah, we all have read, and it is also experienced. Right, cost has increased very significantly. In most countries, its inflation has reached decades high. And this has prompted central bankers across the world to increase rates, yeah. And as a result of that, it's very real that there is increased risk of recessions, yeah. So what this means for us in hospitality sector is that there will be pressure on top line, when recessions, if indeed recessions happen, there will be, pressure, on discretionary spending. So our revenue may be affected. And at the same time, because of increased costs, right, there will be cost pressures. Meaning, so when we looked at cost pressures and top line pressures, it will give us, increased pressures on bottom line. Yeah, and obviously with increased interest rate, apart from risk of increased borrowing costs, there is also the possibility of cap rate going up. So as cap rate goes up, valuations could be under pressure, and that will also have pressures on our NAV. Yeah. And amidst the uncertainties, it's likely that Sing dollar will continue to strengthen, which we have seen. Yeah, from April, when we announced the strategic review, until now, we have indeed seen the Sing dollar continue to strengthen very significantly across all the operating currencies that we operated in. So if from now on Sing dollar still continue to strengthen, it would definitely limit any potential revaluation gains and DPS growth from whatever effort that we can make from COVID recovery. Right. And the other point, which I also want to highlight to our civil security holders here, is that size matters, for a REIT, yeah, because size helps to enable liquidity and growth, yeah. And as we know, FHT size is small, and this has limited our ability to reap the benefits from a continued listing. We rank, second. We rank second amongst the. We rank 32nd amongst the S-REIT, yep. And if you looked at our average trading volume, it has been low. And what this means is that we have not been able to attract institutional followings. Analyst coverage over the counters has been, quite weak, yeah. And it doesn't drive the liquidity that we need to for the yield to trade down and the price to trade up. So that is limiting our growth as well, yeah. So with that in the background, the FHT board, especially the independent directors, therefore ask ourselves, what can we do, to unlock value for investors? Can we just, apart from business as usual, is there any other things that we can look at? And that was the reason why we initiated the exercise to look at strategic options, yeah. And we have therefore come to today's proposed offer, yeah. And when we obviously looked at, negotiating the price with FPL, we looked at various financial benchmarks, yeah. So these few slides will summarize the benchmark we looked at when we considered the price of 70 cents, yeah. Right. Okay. So first thing first, maybe I will explain that when we started to go into the negotiations, we decided to commission valuations of FHT's properties to update our valuations to 31st of May, correct? Because we wanted to make sure that the valuations that we have, yeah, as a basis for us to start negotiations, to talk about negotiating price with any potential parties, is a fair price that has taken into considerations all the recovery tractions, and that's what we did, yeah. And so based on, okay, so maybe I'll backtrack a little bit. Okay, so based on this chart, you can see that we have considered valuers, Servius, we appointed them. They looked at the valuations for all the 14 properties, looked at the forward-looking outlook, recovery outlook, and so on. So they have included that into their updated valuations. And in local currencies terms, actually valuations have increased somewhat. But again, this was offset by FX, yeah. When we adjusted, when we so-called apply the May FX on the NAV. And as a result of that, our NAV has more or less stayed the same, yeah. So based on the 70 cents that we have under this proposed scheme, the multiples that actually compares favorably against the various benchmarks that we look at here, against the historical traded multiples of FHT, against the average of precedents of S-REIT privatizations, and also against average of hospitality REIT peers. Yeah. And the scheme's considerations also represent a significant premium against our historical reward, as you can see. Yeah. The premium over benchmark prices also exceed average premium paid in precedent S-REIT privatizations over corresponding benchmark periods, right? And at 70 cents, the implied total return for investors is almost 23%, assuming investors came in to invest at IPO and also further on subscribe to the rights issue. And at 23%, this actually ranked second out of our peers, or hospitality peers, over the same period. Yeah. Okay, and the scheme considerations also represents a premium of 16.7% to analyst consensus target price in 2022. Yeah, and the other perspective is that the 70 cents also takes into account the pre-COVID-19 portfolio valuations. In fact, 70 cents works out to pre-COVID valuation, adjusted for FX change. So I would now want to draw your attentions to the IFA letters and also the directors' letters in the scheme's document. So I encourage all the stable security holders to really take a close read, of these documents in the scheme doc. But I will summarize, the gist here. Right, essentially, with regard to the resolutions to change the trust deeds, the proposed amendments to the trust deeds, the recommendations of the FHT directors is to vote in favor, of the trustee amendments. And in relation to the scheme resolutions, the IFA, Deloitte in this case, in these transactions, has opined that the financial terms of the schemes are fair and reasonable, and accordingly, the IFA has advised the independent directors to recommend the stable securities to vote in favor of the scheme resolutions. And the independent directors have, after considering the terms of the schemes and also the advice given by IFA, accordingly have given their recommendations to civil security holders to vote in favor of the scheme resolutions. Right. Now, a very quick look at the approval that we need. Okay. As I mentioned just now, a while ago, there will be two resolutions that we are seeking from stable security holders: the resolutions to amend the trust deed and also the resolutions for the scheme. Right. So these are the threshold requirements. We need 75% threshold voting. Okay. Timeline-wise, okay, the scheme doc has been dispatched on the 19th of August. The EGMs will be convened on the 12th of September. I think I would highlight to our civil security holders that the lodgement of the proxy forms deadline is on the 10th of September. So if you're unable to attend the EGM on the 12th of September, so please do note that your proxy forms has reached us. You have the last date for you to lodge is on the 12th. It's on the 10th of September, right? Okay, so there's some instructions on the voting. Right, so as I mentioned, 10th of September is the deadline, and if you can make it to vote for the resolutions in person, we welcome you very much to come to Intercontinental again, this hotel again, on the 12th of September to vote. Now, just a very quick run through in terms of how the votes will be carried out. Right. First of all, we'll be voting on the resolutions with regard to the trust deed amendments. Right. So there's two possibilities. If the first outcome is that the trustee amendments is not voted through, we will not proceed to vote for the scheme resolutions, right? So we will only proceed for the voting of the scheme resolutions if the first resolution is voted through, right? And right, so when we proceed on to vote for the scheme resolutions, right, if it is voted through, then investors can expect, the privatizations to proceed, and you can then expect to, receive your privatizations proceeds sometime in maybe around 19th of October. Yeah. Okay, so this in short is a summary of the transactions. I think I would just want to highlight a few key points here for our SIPA security holders. I think the first thing is that we initiated this exercise, this strategic review, to want to unlock maximum value, for our investors here. And yes, markets is recovering. We are encouraged to see that, but it is going to take time with all the uncertainties that we are seeing. And what we have done here in negotiating for the 70-cent scheme considerations is to have brought forward, right, the recovery for our investors. Yeah, just to give some historical numbers. In fact, the VWAP, historical VWAP for the year 2019, is the year before COVID, for FHT was 65 cents. And just before, towards the year end of 2019, FHT was actually trading at about 70 to 71 cents thereabout. Yeah. So, essentially, as what I mentioned, the 70 cents is actually to have brought forward the impact of the recovery for investors here. Yeah. And so, we believe that it's a very credible options that investors should seriously consider. Yeah. It gives a total return of about 23% to investors, ranked second, amongst our peers, hospitality peers. So, and one very key point is that the 70 cents is all cash offer at 1.07 times premium. Is a much better valuations vis-a-vis the other multiples that our peers are trading at right now. So this gives the flexibility for investors to take the offer, take the cash, and at a premium, and you can then have the flexibility to reinvest and redeploy your proceeds. Yeah, I think with this, I will end my presentations.
Thank you very
much.
Yeah. Your case is that the future looks bleak and you have not been able to provide a good DPU, and you think that that will go down from your presentation. You see, you are telling the security holders that, look, things are bad, you've not been able to meet your expectations, and for the future looks good, bad. We don't think we can be. That's your case.
No, I think certainly things are looking positive, right? I'm encouraged that we are recovering, really. Yeah, I can't say that things are looking bleak.
Okay.
I don't think bleak is the right word to say.
Right, but there are risks that you pointed out.
Yeah, there are risks. There's certainly risk, yeah. And I mean, we have heard about this discussions on whether the market is going to have a V-shaped recovery or not. I personally don't think it's going to be a V-shaped recovery. Yeah, I think the recovery there are uncertainties around the pace of recovery. How long is it going to take for us to recover back to pre-pandemic level? I think it's going to take time. Yeah, I think it's going to take time. Right. I mean, for instance, tourism, hospitality or aviation industries, right? Well, it's true that we see people having a lot of pent-up demand, wanting to travel, and that's very good and very encouraging. But after 2.5 years of, so-called
doldrum.
Yeah, it's worse than doldrum. Yeah. That people has been retrenched, staff strength in hotels has been cut very drastically across cities, across countries, yeah, including airport where we see, right? Staff strength has been, cut significantly, drastically. Now for the markets to come back, yeah, we are going to have to rebuild that, yeah, that capabilities and that network, yeah. So it's going to take time. Yeah.
So some of them asked me, will you ask the CEO, what is the position for the undistributed DPU? There's some undistributed DPU still with you, with the company. What's happening to that?
Okay, as our investors would know, since the pandemic started, we have announced that we will be paying our distributions based on 90%. Yeah, that is so that we can conserve some cash, for working capital purposes. We needed the cash, So the policy has been changed to 90% since more than 2.5 years ago. Yeah. So that is part of our ordinary business. So business is business, right? So obviously, when we negotiated with FPL for the 70 cents, it's a total package. Yeah, business aside, so we negotiated for that. So of course, when it comes to paying our distributions based on normal, ordinary cost of business, the 90%, we will do that. We will be paying that 90% out to investors. Yeah.
So you are saying to the security holders, we got to do this in your interest because we don't think that we can make it for you, make it good for you, and that we have not been able to give you good DPU, and we may not be able to do that, and we may be going down.
I think it's going to take time. I wouldn't say it's going to go down. Right. Last year we paid less than 1 cent DPS. Yeah, I'm very cognizant of that. And for a REIT, the mandate of a REIT is to deliver DPS growth and NAV growth. Yeah, our investors had suffered. Yeah, so we are talking about less than 1 cent last year. So for a 70-cent price, let's just take. I think I mentioned that at our previous fireside chat. Let's just take 5%. And if interest rates going up, REIT could trade with expectations of higher, interest, right? But for the sake of argument, let's just take 5%, right? 5% of 70 cents works out to 3.5 cents DPU, right? Last year we paid 1 cent. It's going to take time for us to reach that 3.5 cents. Yes, market is recovering. Is a good so-called. The direction is right. Is good, but there are headwinds, as I mentioned earlier in one of my slides.
One of which is Forex.
Yeah, okay. So we just look at organically, business, property to property, local currency first, right? Now, hotels, because of shortage of manpower, generally we are not able to ramp up occupancy so fast. Yeah. The best we can do is try to yield our rate as much as possible. Right? Even so, there are pressures if indeed recessions comes. Yeah. So there will be pressures of top line. But at the same time, manpower costs, energy costs, which these are the two big items for hotel, have come out very significantly. And we also have read about UK, Europe, energy prices expected to increase very significantly. These will put pressures on costs. So when you take revenue pressures and cost pressures together, margin is going to be, under pressure. Yeah. So and that is in that property level. We also have the FX, issues that, David, you correctly pointed out, right? Yeah. The Sing dollar is so strong. We are just looking at the data points because these are things that we track, right? Very, very vigilantly. Okay. Now, for example, pound. When we announced our strategic initiatives in April on the 8th, the pound was trading at 1.78. Today, just yesterday, I checked. Is 1.63, and the euro has dropped from 1.5 to 1.39. Oh yeah, and the yen, for people who are planning to go to Japan to travel, I think you're very happy because yen has been depreciating against the Sing dollar, right? Instead, it was 90 in April, and now it's 99. And the ringgit as well has dropped from 3.13 to now 3.2 something, right? So and Australia as well, the currencies has dropped from 1.02 in April to now 96. Book parity, 0.96. So we are looking at just over the 6 months since April until now, the FX against us is ranging between maybe around as high as 8%, Yeah. So whatever things that we can do at a property level, when we translate this back to Sing dollar terms, our DPS will be under pressure. I mean, this is the reality. Yeah. I'm very thankful for investors who have followed us through all the years. But it behooves that as management, we have to ask ourselves, we have to look forward. What is the best thing for our investors? Yeah, given all the points I mentioned just now. Business, challenges, right? Look forward. How are we going to be able to drive value for investors? And can we grow? Given our size, I mean, we all have seen REITs consolidating. It helps because, as I mentioned, size matters. Liquidity drives, price efficiency, which means that yield will trade down, and they can then it's easier for them to find accretive acquisitions, right? So these are all things, the structural issues are still there for us to have to contend with. So when we take everything in totality and ask ourselves, so what's best? What should we do? Is business as usual the best options I can give to our investors? So that's why we're here today. Yeah.
Okay, so I'm going to move on to questions from the audience, but we have given you instructions on the screen. Only questions by Pigeonhole. Okay, this is not an AGM or EGM. It's a dialogue session, so I want to be fair to those who are at home. Those who are not here, they are doing it by Pigeonhole. So please, if you have a question, I'm sure you would have submitted by Pigeonhole, and we'll answer all of them. First question. Why is the time to privatize now that the travel industry is picking up? Mr. Tan.
Very good point, Mr. Tan. Yeah. Actually, when we were in the thick of the pandemic, I would not want to initiate any discussions on strategic options because we would not be negotiating from a point of strength. Yeah. And, if you recall, actually last year, FHT at one point in time was trading below 40 cents. Yeah. And for a good part, it was trading at 40 over cents. And it started to pick up. In fact, after we announced, actually before that, when the government started to, open up and ease travel restrictions and so on and so forth, right? It started to go, like the whole industry actually started to, trade up, right? And when we announced the strategic review, it started to trade up, even more, yeah. So, and that's also the time when the market is looking better. And it allows us to therefore better place ourselves, to negotiate from a position of strength. And as I mentioned, after we announced, we reach out, we make it very open to tell, the public that, hey, I'm open to, look at potential offers, yeah. So we make it public, yeah. And we also appointed Savills to bring our valuations up to date, bring in all the recovery prospects in our valuations. Okay. And with that, we started to negotiate, yeah. And we think that we are doing right because with this, it gives us a good basis to start to negotiate, right? And FPL came back and said they are interested, so therefore we left it to, the IDs, then drive the whole robust process to negotiate for a best value. And throughout, we are open to any third parties' offers, but to date we have no other offers. That's a fact, yeah. But at 1.07 times, we think that it is a very credible offer that we can put to investors. You can take the 1.07 and you can reinvest into, if you still want to stay investors in the hospitality industry because of the opening and the recovery, right, continue to stay investors in the hospitality sector, or whatever that's related to tourism, and you can still ride the recovery, yeah.
So she has adequately dealt with the reasons why they are going private, and you have given many reasons. Maybe just give point from 3 points.
Yeah.
No need to go detail.
Right. To me, number one is that you are getting full cash at 1.07 times multiple, premium to valuations, premium to other comms. Yeah. And then you can reinvest in other so-called counters, as I mentioned, if you still want to stay invested. It definitely is better for investors.
Yes. Please move on. If FHT is privatized, what are TCCs and FPLs they offer a future plan for FHT's business? Do they have a target to get FHT back to its potential as stated during its IPO? If so, how long will it take? Do you have an idea of what they're going to do? Now, you can't ask her about the future.
Yeah,
what the
actually,
managers
truth be told, we initiated the exercise and FPL responded to us. Yeah, and
so you have no idea.
They were not in. Yeah, sorry.
Next, not privy. Next one. Clarification. Company announces that price offered, that is 70 cents, would this be offset with dividends to be paid? What is the dividend yet to come and why is not settled before the scheme meeting?
The answer to the first part of the question is no, this will not be offset. 70 cents is 70 cents is what you'll be getting. And if we declare the dividend, it will be an additional sum of money that you'll be receiving. Yeah. Once we effect the privatizations. Yeah.
Okay. Next question. In the event the scheme or meeting is not successful, what will happen?
It will be business as usual. The FHT will stay listed. Yeah. And we will do our best to give dividends to investors. Yeah.
Yeah. Okay. Next.
But I would just want to highlight that outlook is not. There's still a lot of uncertainties, and the price at 1.07 times is actually very attractive for investors to take and then to reinvest. Yeah.
Okay. Here's a cynic. How can you say you are bringing forward value when it's already trading? Are you bringing forward value?
We are bringing forward recovery.
Recovery.
Yeah.
It's quite
yes.
laughable.
I mean, the fact of the matter that the 71 cents, is a result of this strategic exercise, this privatization's offer. Yeah. That, and the reason why it's trading at 71 cents is because investors, or rather markets, expect the accrued distributions to be paid. Yeah, that's why there's a slight premium to the 70 cents.
Okay. IPO was at 88 cents. How can the privatization price at 70 cents we see it as premium? It's a straight loss of capital.
Understand. When we say premium, we are looking at premium to traded comms right now. Yeah. So we looked at the 70 cents vis-a-vis our NAV, which is 65 cents. That's how we get to a 1.07, which is 7% above the NAV. So, that's how market look at value and price and call whether it's a premium. A premium is always premium against your book value. Yeah. So when you look at the peers, other hospitality peers, they also have a book value. And their traded price is also measured and benchmarked against that book value. Yeah. So when I say that we are at 70 cents against 65 cents, it's a 7% premium against our book. It is actually a better so-called valuation versus our peers, their traded price versus their book value. It is definitely not as attractive as what we are doing here as 7%. In fact, they are trading below their book. Yeah, so that's
Has any of your peers given at IPO price when they're buying?
I can't comment, Yeah, I don't study my.
Okay, next one, please. When will the 90% DPU be distributed if the expected delist date is in late October?
Yeah, it will be together when we paid out the November, Okay, yeah. Okay, so we will pay out the 70 cents first, and then after that we will pay out the accrued distributions,
November.
Yeah, after we close the accounts.
Any chance for investors to continue to be a private unit holder? Okay, next.
Actually, I don't think that there's a structure that allows for this.
Yeah.
Yeah. The truth of the matter, it doesn't. Yeah, this is a good question.
Why merger is not considered for a bigger entity?
Merger may not be the best options for investors. Merger requires unitholders' approval for both sides. And there's always the valuations and pricing of both sides. I would think that an all-cash, offer at 1.07 above book value, is a better options for investors to take. Yeah, and if you want, you can then take the money and invest in whatever counter you want. Yeah.
Next, yeah. How is it bringing forward value when it is already, we have dealt with it, answered this. Next. Thank you for answering my question. Okay, all right. Yeah, thanking you.
I see, thank you. Yeah, we are most welcome.
Okay, you can flash it, yeah. So, now, the feeling among some unit holders that the offerer is actually buying it cheap. Not true?
Okay, as I mentioned, that this entire exercise was initiated by us. FPL, the offerer, was not eager, to launch a privatization offer of FHT. Yeah, we initiated the exercise with the intention to, to find is there any other strategic options where we can, enhance value for investors. Yeah. So when we did the exercise, we reached out to all parties, right? And so far only FPL came back and said that they are interested to do a privatization offer with us. So we then commenced negotiations. So the moment we went into negotiations, right? Yeah, we have to, look at benchmarks, market benchmark, precedents, pricings, for such transactions. And it is on that premise that we then, negotiate and reach today's offer price. Yeah.
You see the audience, many of them are my age group or in my club. They all invested in FHT for dividends.
Yes.
Right? So,
yes.
of course, when that is being taken away, they will be worried. But what you're saying is, I'm sorry, in future, I can't give you the DPU. I'm not sure whether I can give you the DPU that we have been giving. Even we couldn't give the last time, what, 1 cent? Yeah. So we are taking this decision, just to summarize, to make sure that you get a fairly good value and then you move to something else that you want to do. So if approved by your staple security holders, could you share on the timeline leading to the payout? Just now you mentioned,
yes.
Could you just...
Yeah. So, okay, we have a couple of, to-dos. After assuming if the scheme resolutions is passed, at the EGM on the 12th of September, we will then need to get court sanctions for the scheme resolutions, the approved, resolutions. And we also need to seek a couple of approvals, including SGX, also the Australian Foreign Investors, Investors Review Board as well. So this will have to be done, and we expect, the payout to be sometime around 19th of October. Yeah.
Of course, you have said that both the IFA and independent directors have said vote in favor. This is the final offer according to you. The board has decided it will not, it cannot go any further than this.
I think this, whether FPL will increase price or not, I can't comment for them. But so far, there is no other offer on the table. And FHT independent directors have completed their negotiations with FPL.
You talked about headwinds ahead, influencing your decision. Just for the benefit of the FHT security holders, just could you summarize them in point form? The headwinds, what are the risks?
Yeah, as I've mentioned, right, revenue side, we struggle with, to sell rooms, we need to have the manpower to be able to turn the rooms around, So, that definitely, manpower challenges is very real, right? Now, to sell everything else, even F&B and what have you, we have to be able to quickly get people back to self-services and what have you. Yeah. So revenue side, delivering that, that's the operation side. But market, there's also challenging, in the form of as we're seeing, right? Even indeed recession comes about, there will be cutback on spending. Yeah. So revenue side is one risk. And cost is another risk which I mentioned as well, right? Manpower, utilities, these are big items, on the cost side of hotels. Yeah. So if I were to say, these are real challenges for us. Yeah.
So the real challenges. Can FHD sell price by piece? If that can realize a huge profit that can surely more than offset the FX depreciation.
I suppose the question here is when it says sell piece by piece, it means the assets selling one by one, right? We have looked at the options before. Yeah. But stripping assets for sale is never an easy exercise. Piece by piece. Yeah. So it is a very transactions there's going to be very high uncertainty. And the moment we go out to the market to say that we're going to sell assets piece by piece, you are likely to face we will not be putting ourselves in a good position. Yeah. And usually you have a mix, because in your portfolio people will pick and choose, you see. And so what's going to happen to some of the assets that's not, so it's not going to be easy to conduct exercise. It will be a very protracted exercise. It will take a long time to even reach there. So as you drag on, it will be working against us. Yeah. So we have looked at these options and we don't think it's tenable. It will give you the best value. The best value is still to lock, stock, barrel, give the counter, look at market benchmark, what is the best valuation I can negotiate for.
Can you just say that on the list you're 32, that is, you are ranking 32.
Yeah, number 32nd.
And we're a small REIT.
Small, yeah.
So to merge with another REIT, you just be swallowed up.
Yeah, and I think negotiating for price is also, I think some of the investors might have invested in REITs that have gone through merger, right? It's always a question of how you're going to price both sides, and you need to go through EGM on both sides, Yeah, and is it going to be a cash plus units offer, or is it going to be an all cash offer, and so on and so forth. And an all cash offer from an offer standpoint is always more costly because they have to come up with all cash. Yeah, in this case for FPL to do this privatization they have to come up with $500 million to do it. Yeah.
In case where scheme does not go through, will Miss Yu still say, as CEO, has the directors considered merging with other Frasers? See, they like you very much. Huh?
Yeah, okay. I will have to be responsible and, and do my best, right? If the scheme, if the business continue. But ultimately, I will still have to say that a REIT mandate is very clear. DPS growth and NAV growth, right? And we have to be very aware that that's something that we have to be able to deliver to investors. It's not only me, but anybody who comes into my room must be able to achieve that. Yeah. Otherwise, we are not able to, do what is right and needed for investors. Yeah. And a lot of times, investors invest in REITs for the income play, right? And if we continue to pay less than 1 cent or inching up a bit by bit over the years, I don't think we are, doing what we should as set out in a REIT mandate.
Yes. Okay. Is FPL a related party?
Yes, definitely. And they have to abstain from voting.
So they can't vote?
They can't. All FPL and FPL concerted parties, including also the substantial shareholder, unit security holders of FHT, they can't vote as well. And FHT managers, we all can't vote. Yeah. So the entire scheme is in the hands of minority stable securities. And we want it that way. We initiated the exercise, tried to find the best value, and we structured it as a scheme so that the entire transaction is in the hands of the stable security holders, the minorities. So it's all up to you to vote. Yeah. And so please, if you can, come for the EGM on the 12th of September. If not, please remember to lodge your proxy forms by the 10th of September.
So, are you telling them to vote for or against? Have consideration been given to overcoming challenges, example foreign exchange hedging in this transaction?
Yes, definitely.
Automation.
Maybe I'll give that questions to our CFO here, Eric.
Yeah. Yeah.
Yeah, on hedging itself, actually what we do is that we do have a very robust hedging policy, treasury policy. So of course we do a natural hedging where we can. So when we first go on acquisition, we of course try to borrow onshore to minimize the exposure. Having said that, of course, there will still be, a hedging is not perfect in the sense that you can never truly eliminate all the risks. So notwithstanding that, you will always see that we have a policy and we abide by that. Our policy is really to hedge at least on balance sheet 20 to 80%. That's what we do. Notwithstanding that, there will still be some exposure, like I explained earlier. So yes, we actually do that.
Okay, thank you.
So
Last
FX hedging, maybe just to add to what Eric said, FX hedging will help us to, smoothen out, the volatility. Yeah, but it will not take away your FX impact. You probably, for the forwards that we have bought, when pound depreciate, it won't hit us immediately. But if it continues to be low, it will eventually hit us. So that's the effect.
You've got shares in this.
Yes, of course.
Yeah.
I was paid in the shares.
Yes. And you're feeling sad.
Huh?
You're feeling sad.
No. I think at the end of the day, we just have to, as management, do our best.
You're being practical.
Yeah. We just have to be
practical.
We have to be, we have to do our best. I mean, that's what we are supposed to do. Yeah.
Okay. Very last question. No more questions. So you've heard, and I would advise you to go through this on the internet, on the website, and the previous videos have also been played on the website. All right, so you can watch that over and over again and convince yourself whether you should vote for or against. That's your decision. Nobody here is telling you which way you should go. Here at SIAS, we make sure you get your information. All right, and that must be in a simple and understandable form so that you members, I know many of you are quite old now, you've been in the company for a long time, since 2014, is it?
2014.
2014, and other REITs. And this is happening because the world situation is getting not very healthy, although it looks people are back in restaurants and people are flying, but the central banks all over the world are increasing interest rates, number one. All right, Ukraine war is not going to stop tomorrow. It's going to go on for another, don't know how long, 1 year, 2 years, 3 years, we don't know. It could become a much bigger war than what it is. We don't know. A lot of uncertainties, a lot of questions that are in the global markets. America and China are getting very heated up. It's like a Cold War now. All right, and then now India is also clashing with, beginning to clash with China over the passageway.
Yep.
And then South China Sea is another one where America is trying to control. So we are living in a very uncertain world. We are facing a lot of threats to the economies. We are facing a lot of threat to our pockets. We have to make a rational decision. What is good for us in these circumstances? Cash is king, or do you want to wait, you want to be invested? So you all are investors. SIAS investors are very smart people, SIAS stands for Smart Investors Always Succeed, right? All of you are smart people. So she has spent a lot of time with us. This is the third time that we have invited her to speak to you, and she has spoken from her heart. All right, and the decision is yours now. Make a decision that is in your favor. That must be your decision now. Okay, if you need any more clarifications, please, you can send it to her.
Please.
She will answer.
Please call us that you
The
have the
company-
numbers.
Yeah.
We will, definitely address
yeah.
your questions.
Yeah. Right. If not, send it to SIAS and we'll send it to her. Definitely all your questions will be answered. Now, I know one or two of you will wait to talk to her as you go down, but she is always willing. So thank you very much for coming.
Thank you.
And Sinfan, really, really grateful to you for taking so much of time
Thanks, David. My
with
pleasure.
our shareholders.
Yeah.
Okay, good night and all the best. I wish you good luck.
Thank you. Good night. Thanks so much, David.